I'm the anti-financial advisor. I notice that if I work less than 10 hours a week, I get depressed. My
Me
fire
too.
burns out. Dave Ramsey can suck it.
Welcome back, investor. We've got an episode of Passive Income Adventures. If this is your first time with us, we've got Chris Miles today. Hello, Chris.
Hey, Emma, it's good to be back on again.
Yeah, we talk on the show all things finance, personal finance, investing, entrepreneurship, all the things that you need in order to put together your own passive income lifestyle. It's definitely something that people talk about a lot, but not a lot of people are doing it or educating others on how to do it. And Chris, that is your wheelhouse as a financial planner, the unfinancial planner, really just helping people figure out how they want to live and how to pay for it.
For sure. No, it's been a fun journey. And it's my story. I've had the ups and the downs. So I'm excited to be able to share some of the things I've learned along the way.
Yeah, let's kick it off. I think I first came across you when I was listening to you speak at a real estate investor association in Idaho, and I was watching it remotely. And I liked a lot of the stuff that you had to say. And you said that you were in Utah. And I thought, oh, perfect. Like, I should invite
Mhm.
you to come and speak at one of my meetings. And so you came to a live meetup and spoke. You were one of my very first guests. And then a couple of months later, I dropped my kid off at a birthday party and you answered the door. And I thought, this is like such a
Small world.
yeah, like a coincidence. From my window, I can actually see your old neighborhood, like the house that you lived in, and you just were right there, and our kids actually even went to school together, and we had no idea. But at the same time, it wasn't really that unusual because the school that they were attending was for homeschoolers who were studying entrepreneurship. And so I met so many amazing parents there who were doing so many amazing things on the financial side that it
Mhm.
only makes sense that you would have your kids at that school as well. So I feel like that to me is just a testament of being around people who can help you, teach you, who have the same ideals because our kids are going to the same school. We live in a similar area. We're both at real estate clubs and all of that. So kick us off by talking a little bit about how you help people just by people in your network, what
Mhm.
you do, and how people can enjoy just getting to know Chris and what you can do for people.
Yeah, I'm the anti-financial advisor, as you mentioned, as I'm often called, because even though I used to be a financial advisor, I've now moved away from that to teach people actually how to create passive income now, investing in truly passive investments. Not like talking about passive income, whereas I'm going to teach you how to wholesale, which is
That,
great. You can make millions of dollars there, but it's anything but passive.
that's a business.
It's a business. Exactly. So even being a real estate flipper, you can make sick amounts of money doing that. But again, it's a business. So
Mhm.
the people we more help are the people that are saying, I've got cash. How can I actually take this cash to make more money for me? It's almost like the Dave Ramsey poster children, the people that are like, I saved and I did all
Yeah.
this stuff. I even got debt free or almost debt free. And still I have no hope of financial freedom. Right.
Yeah.
So
Yeah.
we actually coach people one on one, help them like walk side by side and guide them to strategize what to do with their money and then connect them with those passive deals, kind of like the stuff that you have.
Yeah, so we've talked about this before. I feel like Dave Ramsey poster child. Let's just go down that rabbit
Mhm.
hole for just a couple of minutes. We lived in Texas for 20 years. Dave was all over the radio, evangelical community, and I really got into it. And I felt like he had a lot of really good things to say, but I feel like at a certain point, investing with zero debt for real estate, and I just wasn't really feeling like we are making any progress. And when we moved here and we met you, you mentioned that you guys were down the Dave Ramsey rabbit hole as well. So you actually know a lot more about it than I do and have a lot more experience with people who've been following that. Can you talk to the listener, like you said, about where that stuff is helpful and then where maybe a person who's not addicted to debt might make a departure from that practice?
Yeah, it's interesting because he is a great guy. He's done a lot of good for millions and millions of people, right? There's no questioning that. And the guy's an amazing business owner and marketer. He's done some incredible things just in the world today. I'll give you some context. My wife was actually the very first approved Dave Ramsey counselor in the state of Utah. They had blacklisted Utah, but whatever reason they let her in. So she had done it for a while and then realized that there were some scarcity type things taught that she didn't really agree with. She realized, like, hey, I know how to create wealth. And some of this stuff is almost pushing against creating wealth. For me, I started out like over 20 years ago as the traditional mainstream financial advisor, right? I was the salesman in the suit trying to get you into mutual funds and everything else. And so I was following that same thing: save everything, spend nothing, save it forever. Hopefully someday you'll have something. And so I was all about doing the same methodology. However, after 4 years, I remember I'd gone to meet with my dad. I sat down with him because he said, now you understand, my dad was like the cheapest son of a gun you've ever met. This guy,
No,
he'd
my
stay
dad was.
frugal. Maybe we have the same dad. Maybe we're related.
Yeah.
But he was just like the cheapest son of a gun. Like he would never buy food unless it was on like case lot sale. So he had years worth of Mrs. Buttersworth that's now 20 years old that he refused to throw away.
Sugar never goes bad.
No, never. It's like Cap and Crunch. I lived on that for an entire year to the
Wow.
point where like my mouth was scarred by it. Like it was horrible. You know what I mean? Like you suck
Yes.
on the Cap'n Crunch, like your mouth hurts, right?
Yep.
Yeah, I probably have permanent scars from that. And so when I sat down with him, I expected that he had really done what he said he's done, which is save everything and he stuffed it in his got the match, right? He paid off all of his debt, including his house in 18 years. So this guy was doing everything by the book and he
Mhm.
was saving a lot too. It wasn't like he wasn't saving enough, but he was saving a lot. And when I sat down with him, I said, Dad, here's the deal. With the money you have today, and you're 61 years old, if you wanted to retire today, you're probably gonna have to die in about 5 or 6 years because that's when
Oh,
you're gonna
boy.
run out of money. Okay, that's not what I wanna hear from you. You're supposed to tell me how I can retire because my job is just about to kill me from the stress.
Mhm.
And he already had heart attacks and strokes by this point. And I said, Dad, I don't know. You did everything right. Everything I teach as a financial advisor, you did it by the book, and it's just not enough. And you even did what they told you to do. Even the financial advisors, you did everything, and it's just not enough. And that's what bothered me. Like, it's like when the student's ready, the teacher appears. I was bugged because the whole dream, the hopium, I was dealing out hopium to people, like trying to tell them that if you just save forever in these mutual funds, that someday you'll be financially free too in your old and golden years. But yet my dad couldn't do it either. And then
Yeah,
I
but
looked at,
you had also not done it. Like, as a younger
yeah,
financial planner, you
that's
just
right.
didn't know if this stuff would actually work because you hadn't retired on that stuff, and you figured, "Yeah, there's no chance of that. I'll find out when I'm 60 or 65 if this stuff actually works."
That's the thing. Yeah. I had a friend who actually was in real estate investing. He was starting to do fix and flips and things like that.
Okay.
And he was telling me, he's Chris, how many of your clients are financially free? Even the ones you've inherited from decades from other financial advisors. I
0.
said, "None of them.
Uh,
There's retired ones, but they're worried about running out of money too soon, right? So they're
yeah.
never really free." So how about this? How many of you guys are financially free, not off the commissions you're earning, but actually doing these mutual fund investments? And like you said, Emma, it wasn't just me. Obviously, I was in my late 20s by this point,
Mhm.
but even like guys have been working there since the 1970s couldn't retire either.
Yep.
And that's when I knew there was a problem, right? And so I started to go down the real estate rabbit hole instead. In fact, I vowed never to teach about money again. I would just be a mortgage broker because in 2006 it was easy to be a mortgage broker.
Oh,
It
yeah.
was like 2021, right? And then I'd also teach ballroom dancing on the side while I was even doing some stock investing. I was actually doing trading stocks and options and teach people how to do that too. So I was doing all that, but I wanted to learn this real estate stuff because those are the people I actually saw that were financially free in their 20s and 30s. So as I went down that path, later that year, like I was able to retire myself. I had enough passive income coming in. Granted, I had a young family at the time. Only needed like 3,500 a month to live on. So it was a lot easier than when I had to do it the second time around where I needed over 10,000 a month to live on. But that's what I did in 2006. And so I was 28 years old, almost 29, retired or could retire. And I was like, what do I do with my life? And that's when I came out of it. And that's the thing is like, I was even listening to Dave Ramsey show at that time, and he teaches great stuff about budgeting. Make sure you're essentially even though it's from a scarcity perspective, like what I teach, which is being a wise steward of your money is
Mhm.
important. He's debt's all evil, right? Like it's all bad. However, as you found out, if you try to follow his advice for creating wealth, and this is where the limitations are budgeting, having a little emergency fund, great. Once you get into how do I get past zero,
Mhm.
right? How do I actually create wealth? This is where it starts to diverge into like real life stuff. Because one, he tells you the stock market makes 12% a year. That's
Yeah.
false. It has not done that long term ever in history. Now, 10 years, 15 years, yes, it has done that over the last 15 years since 2009, now going on
Mhm.
16 years, but it's never done that long term over a 30-year, 40-year period. It's been more like right now, this best I've ever seen in 20 years is 8.74%. The S&P average, right?
I like the stock market. We keep money there. There's nothing easier than a public market trading. It's
Yeah.
very liquid. It's a diversification play for me. It doesn't
Yeah.
even hold the bulk of what we rely on for our living.
Yeah.
Yeah, it's
It's
nice
like
to have a
playing.
little, but
Yeah, I put play money in there. It's
yeah.
just like Bitcoin. Like when I always go into things when they crash. So like when I
Mhm.
bought Bitcoin at 6,000 before it ran up to 65, I
Yeah.
sold out. When it hit up over 50,000, I was like, I'm out. Like
Wait, you mean
take it.
buy low, sell high?
I know it's weird. I learned that in stock trading, believe it or not. And even now, I don't even trade stocks and options because the market's like more than like two standard deviations above where it should be right now. Like
Yeah.
the S&P should actually be closer to 2,200, 2,300, and it's like
Mhm.
1,000. Once we have a crash and a correction, it's going to hurt and hurt bad. And
Yeah.
who knows? Maybe it'll be a Doge will help spark that and create this nice little
No idea where it's going, but I do know that it's something that I have zero control over, which is one
That's right.
reason that we diversified heavily into private markets. Not that I'm controlling my private market investments either, because I prefer to be a passive investor limited partner on
Yeah.
those. And I only want to run like my one business that I do and become really good at that. And then everything else passive. But at the same time, even though I don't have direct control over my private market investing, I feel like for some reason, I feel more shielded from the volatility of public markets. I
Oh,
don't
yeah.
know. Pulling
You don't
myself.
worry about it. Yeah, it's really a more free lifestyle. And if
Mhm,
that weren't enough, I've literally had people that teach people how to trade options, people that sell their programs out there online,
mhm,
come to me and say, "Chris, I need passive income. I'm
mhm.
not getting it trading options." Even though they sell the lifestyle of just go on your computer, you don't need anybody around you, and you're done. I'm trapped to my computer every morning. Even if it's just for a half hour to an hour, I'm
Yeah,
still locked in. I have to watch this on a daily basis, even with my automations. It's like, I want passive income like you talk about with real estate. Like that sounds better.
yeah,
So just know that even when you're being pitched and sold all this stuff that the stock market's the way to go, or I had a friend I went out to lunch with that he lives here in Utah, but I meet him at a real estate event outside of Utah. That's how I meet people in Utah, is I go outside of Utah, right? But I go and have lunch with him and he's like, "Chris, I'm financially free. I've got over $1 million in the stock market. I can live on my 4%, $40,000 a year." And so that's pretty cool. But you're 29 years old. Did you know that the 4% rule was already debunked? It's actually a 3% rule. Unless you're in your 70s, then 4% does
don't
work.
don't talk to Dave Ramsey about that, he'll yell at you on air if you say if it's a
Oh,
3%.
he did it to George Camel, his
Yeah,
co-host. I
yep,
know, he chewed him out on the air, and then, of course, George had to recant that. I was like, "No, George, you were actually right. 3% is the new rule-ish, but if you're trying to do it retire young, retire rich, the whole FIRE movement type crap going
yeah.
on out there."
Fat millionaire fast lane is
Huh?
definitely yeah.
Yeah.
It's sexy to try and retire in your 20s, but there's just a lot of time to figure out, like, how to make this last, you
You
know?
need to only pull out 2%. If you're gonna go in mutual fund type investments, you should only be pulling out 2%, and that's what I had to tell him. I was like, "If you're in the market, it's only meant for even 3% when you're in your 60s.
Okay.
For you, it's 2% a year, and that's it." He's like, "Does that mean I have to save double now?" I said, "Yeah." "No, I
Yeah,
don't believe you." I'm like, "You don't have to believe me, but just so you know, I was actually a financial advisor dealing with the stock market when you were in 1st grade.
yeah.
So, just saying, I might know a thing or 2 about this." Like,
Yeah. I think that's one of the reasons that we still run a business. It's not just the fulfillment of staying active, staying current, being intellectually challenged by people who have different opinions, that kind of thing. That's all really good for us psychologically. But at the same time, I feel like I still want to build because
mhm,
I want a huge pile for a massive amount of security. And I recognize what we are right now is what they call lean fire, where you have enough to pay your bills, but we were able to say, "Okay, we're walking away from the job and we don't need to work anymore."
mhm.
Honestly, I do wanna upgrade our lifestyle and I wanna upgrade the amount that we can donate, and so for me, I'm still in growth phase, even
Yeah.
though we're retired, because I feel like that's the nice thing about lean fire is you still have a ways to go to get to fat fire, and it's a
Yeah,
challenge.
I like that. What you're describing is like lean fire is what I refer to as financial independence.
Mhm.
But then like your fat fire is what I refer to as financial freedom, which is, but yeah, I like that. That's a great description because, and this is what I'm finding more and more, especially somewhat among Gen Xers, but especially among millennials that they're like, I don't ever want to retire. I don't want to stop working. I want to keep doing, but maybe I want to do it on my terms. Maybe I want to do something I love, right? Because I'm tired of working this just for the job, just for the money. I don't want to
Mhm.
survive. I want to thrive.
Yeah.
And so that's where I love it. I had to do it twice, right? Because recession, I lost everything and then some. I actually went from millionaire to upside down millionaire, where I was over $1 million in debt. Dug out of that hole, didn't file for bankruptcy, but had to pay all that debt back and then start to rebuild my portfolio after losing that investment portfolio to where I was able to do it again by the end of 2016. And I'll tell you though, like it's so nice to be at that point where you don't have to work, right? Like it's nice to have that option where you work because you want to, not because you have to. And I think that's what most people want. Some people
Yeah.
still want to keep working on something that gives them drive. I know with me, like I tried to retire in 2017. That's when after my wife and I got married, we did our first snowbird trip out to California. And I'll tell you, those 2 months, 3 months or so, I was bored out of my mind.
Yes.
And even I had my podcast, I still kept doing that, but I kinda was like, I don't need to do anything. I was, like, coaching and mentoring a few people here and there, but I was really, like, 5, 10 hours a week,
Mhm.
and I actually got depressed.
Yeah.
Like, I noticed that if I work less than 10 hours a week, I get depressed.
Very
My
me
fire
too.
burns out. But if I
Mhm.
work over 40 hours a week, I burn out. So it's
Mhm.
either my fire burns out or I burn too hot and I burn out. And so I have to find that nice medium of that part-time work, but with a real mission behind it. And,
Yeah, and I'm finding volunteering is also it's scratching
yeah,
that itch for me a little bit, but it wasn't enough. Like, when we first got back
yeah,
to Utah after we were traveling, we were building a business all this time, right? But little minor players in the business as far as the admin and the day-to-day go. So we had a lot of extra time. We started volunteering a lot, and I felt like I really wanna do something in the business world. I can't imagine just getting up every morning, and I always thought this was the dream life. The dream life would be to get up and have a calendar full of volunteering appointments, sitting on a nonprofit board, going down to the Humane Society and walking dogs, volunteering at the
yeah.
food bank, like all the stuff that we were doing before that we wished we could do more of. Now we were ready to do more of it, free tutoring, things like that, and I was just like, "This is actually not as great as I thought it was gonna be," and so I buckled down or doubled down on the business a little bit because I do really find that pursuit to be very intellectually challenging and feel like I'm really building things for people. Volunteering is almost like helping people who can't help themselves, but then I also get a lot of joy out of helping people who can help themselves, and it's different places to be.
That's right. It's see, you found out the same thing I did, right? Is that it's good to volunteer and whatnot, but then you feel this calling, like you feel like
Mhm.
you're called to do something more. Because that's the thing is like you become financially independent or even financially free. You can be fat, living fat and happy. But it's kind of like Spider Man with great power comes great responsibility. I
Yeah.
believe that I had a God given responsibility to use my talents and my resources and everything I'm being given for good, for creating a ripple effect. Hence the name
Yeah.
Money Ripples, right?
Mhm.
And I thought about that. So, what is mine? Like, I can live very quiet, happy life at home. So what? That's to me, it's so funny because I had so many people say, I'm not selfish. I want to take care of my family. That's honorable, right? But let's be honest, that is selfish. To only think of you and your family as like the only family that you have, it's a selfish thing, right? To me, like the family is the human race. What can you do to benefit people's lives? And money just is a magnifier of your soul. It just makes you more of who you already are. It allows you to have a bigger megaphone. It allows you to have bigger impact in the world. It's kind of like the first mentor I ever hired when I was a financial advisor. I remember it's actually only $250 to hire this guy. And it felt like a lot of money back then, right? Now I hire people for at least
You're
100
like,
times that at
that
least.
yeah.
But I remember he told me, yeah, I remember interviewing or having a conversation because he wanted to go into politics initially. And he said, yeah, I remember having a conversation with the former CEO of JC Penney's, who's like the
Mhm.
CEO from the 1960s. This guy was old even back then. I don't think he's alive anymore. And so yeah, I was talking to the CEO and I told him about my dream to go into politics when I was a young man. And the CEO of JC Penney said, listen, if you want to change the world, go into business because that's where you can really make a big impact. And I've taken that to heart. It's really true. That's why a lot of times I'll funnel my own money back in my business to even help boost it up and make it bigger and better and everything else so I can teach more people and let them hear that because there's a lot of charlatans out there. There's a lot of fakers out there and you got to be
Oh,
able to cut through that noise and find something that's actually legit.
yeah. Okay, let's talk about that a little bit. I do want you to dive into a little bit more about the loss because I feel like people learn more from stories of the loss rather than the rebuild. I think that's just human nature. Our fear of loss outweighs our hope, our hopium of gain any day. So dive into that a little bit more and then let's touch on how to find, like you said, cut through the noise and find people who are legit doing what they say they can do.
Yeah, the most legit people usually don't have to say they're legit.
Yeah. But I'm legit, Chris.
I know, that's the thing, but that's the hard part because you almost want them to say they're legit. I've started to say that more for myself, but I actually tell people, it's like, listen, you don't have to just look at my life. Look at the people's lives around us. Tony Robbins always says that success leaves clues. You have to ask yourself, okay, great. Are there people that are actually successful? That's why I'll try to bring on the ones that are brave enough to do it. It's so funny that most of our clients are like so shy to ever want to
Mhm.
talk on our podcast. So they're like, no, I don't want to share my experience. What are you talking about? These people want to hear from you. They
Yeah.
want to learn from you because you are where they want to be, but just months or a few years ago, you are where they are now, right? They want to learn from you. Where like with me, some people will question like, yeah, but you've been like that forever. Who's somebody who's real? It's like, what are you
Yeah.
talking about? Am I not real?
It's
But
almost overwhelming though when you're way ahead of the person you're teaching
mhm,
because what got you here won't get you there, and so we're having to
right.
continually change the strategy, and so sometimes we're just magnitudes away from like, when I'm trying to teach my 18-year-old how to buy her first real estate property, and she's just like, "Mom, just say one thing at a time, please," right?
Mm, yeah. That was like my 18-year-old daughter too, going to college and trying to get student aid and things like that, which that's a whole nother story.
Yeah.
But yeah, like how do you tell if somebody's fake and who's not? Now for me, it's kind of become a gut reaction. And also it kind of goes along with what you were saying in the beginning about our like how our worlds collided, right? It's that
Mhm.
birds together do flock together. You want to find those circles of people that are legit. I love getting in different groups, like I'm in different mastermind groups or whatnot. But I tend to, it's funny that the people that are the charlatans, I never run into them because they're never at those kind of events. They want to be the events where their ego gets stroked. And I'm all about anti ego. Like, I'm all about screw that. This is what I wear every day. People are like, oh, do you dress up in suits? No, that was so financial advisor days.
Mhm.
No, I wear t shirts and pants, or if it's warm, I wear shorts anytime I can. That's just who I am. And that's something that you want to find in
Mhm.
the right groups, the right circles. You tend to find that they're together. That's how I built my whole investor network over the last 20 years, is that I stayed away from the people that maybe had a really big message and maybe they're like smooth talkers. They couldn't deliver. Like you and I were talking before we got on the air, there's a guy that's very popular in real estate space. I won't mention his name, but he's got a big social media following. I even use the same guy that does his YouTube videos is doing mine. And I'll tell you though, like I've known this guy since 2008. So now we're going on 17 years. From a personal level, I think he's a friend. I like him. From a business standpoint, if someone were to ask me, would you put money with him? I'd say 100% no way.
Oh. Yep.
Like
Yep.
I like the guy, but I don't like one, he tries to become a completely different person on stage because
Mhm.
hanging out with Tony Robbins long enough, they try to become like Tony Robbins. Like that's the problem, right? They try to become somebody else. That automatically throws up red flags. Come on, dude, just be
Mhm.
who you are. But then two, the fact is like he's in the real estate space and he's ripping, in my opinion, ripping people off, right? Like he is charging people like $50,000 to not even get the cash flow on a property, right? In hopes that maybe in 20 years, you might make a few million off of it. That's one, like his assumption is his numbers are BS. And I love real estate and I still think it's BS. But that two, it's like, I also know his personal motivations because I know him from behind the scenes. I know that money is his business love language. That's the only thing he cares about. And then to show that lifestyle because he's trying to make up for a lack in himself. And I'll tell you, this is true of myself and almost anybody, almost like our emotional traumas and pains and things like that often will drive us to success in business. Like almost every successful, like multimillionaire I know that's in business, and I'm in mastermind groups where you have to have make at least 2 million a year, all the way up to over 100 million a year. You get to them, even though they're very, even in some ways, very enlightened people. Like they've done a lot of personal development work. Still, they're like, yeah, like it was actually my fears or my traumas of something I was either trying to run away from or run towards that caused me
Yeah.
to be successful in life. They just learned to embrace that darkness in them. And so, anyways, coming full circle to this question, like, how do you know, right? One, look to see what circles they run in, right? Is one. Two is I look for people that have been there, they're done that, and they're still doing it today, and others can do the same because it's great if one person gets rich, but are they bringing everybody else up with them? And legitimately, not, oh, look, like they made money on Bitcoin this year, but wait till next year. It's not like that kind of stuff where it's like here today, gone tomorrow. It's like there's a consistent pattern over time that follows it. And you'll see, like you Google somebody enough, you'll see if there's like bad reviews, right? Like you can see if there's people saying, I'm getting ripped off. And by the way, just so you know, it's normal even for good people to have a bad review here or there. I actually have had people doubt my own program because they say, I can't find any bad reviews. I was like, here's what you can do. Go to my Money Ripples Facebook page, go far enough back, you'll find one bad review of a guy that sadly enough, we saved him 30 grand a year in taxes, but it just wasn't what he wanted.
Mhm.
Way more than he paid us. But yeah, he pissed and moaned about it. And by the way, he also rejected all of our advice too. The only thing he did do was the tax stuff. That's where he made the money. The other stuff he lost money on because he wouldn't listen to us. So you got to be careful of that. But again, I always come back to that gut feeling. Do you really get BS vibes from them or not? And that's why I'll often like never let those people come on my show, even though they could probably drive more traffic to my show. I'll just keep them off because to me, it's not worth sacrificing integrity because the worst thing hate to hear is somebody coming on my show. And I'm sure you're like this too, Emma. They come on my show. They're like, yeah, I heard so and so and I decided to go invest money with them. And I lost it all.
Yes.
I never want to hear that. Not
But
saying,
at the same time, though, I've had guests on the show before that I've published. I
mhm,
published the episodes, but I've also had guests on the show where I didn't publish the episode because before it published, I did a little bit more digging and I'm like, too many lawsuits against this guy. I don't
mhm,
want to, or too many bad reviews or whatever. It's like, you know what? I just don't want to be associated with that. But at the same
yeah,
time, like, I'm not doing those deep dive on every guest that we have on a podcast. So this is
right.
because you also have guests on your podcast. What is the responsibility of the listener in that case? You hear somebody on a podcast, I hate to say it, but it's a little bit of a puff piece. I'm not going to go in there and be like, okay, Chris, I did a lot of research on you. I found all this dirt. I dug up all this stuff. I'm going to throw this stuff on the air. But if that was the reputation I had on my show, like, nobody would ever come on and guess. So there's this fine line of
Mhm.
being really challenging and just allowing the person to just say their thing and giving them a platform, but then also host not being responsible for giving them a platform. I actually struggle with this one. So tell me about that from your perspective.
It's true. I have my show now for 11 years, right? So it's I've organically grown it slowly over time versus some people have this big spike in growth. And a lot
Mhm.
of times they buy. By the way, just even on social media like Instagram, TikTok, even when I'm on big shows, and I've paid some big money to be on some of these big shows, and then I find out they just go and they pay for likes, they pay for comments, literally.
Yeah,
It pisses me off because I'm like, it looks so awesome. It's like, whoa, they got over 100,000 views on Instagram. Oh, but they 64,000 came in the first 2 minutes.
the Malaysian bank,
Yeah, exactly,
the
right?
VA
And
bank. Yeah. And I've had
so
people tell me that too. Oh, we'll do this for you. And these are people who just contacted me on my Instagram DMs. It was like people I actually know who are having really good growth on their shows,
oh, yeah.
their podcast or their business, whatever it was. That's what they told me. And they walked me through. We hired this VA bank in Malaysia
Mhm.
or wherever it is, and they get on, they just have multiple screens playing this all day and they play it at 1x. So I'm just sitting there, are you serious? I would rather not grow than like
Yeah, it's true. There's a multifamily syndicator that I could tell is a great marketer because he gets on everybody's shows. But I remember there was a deal he was doing in Provo, Utah. Yeah, this is several years back. I was like, why would you ever do that deal? 'Cause I live like 20 minutes from there. I was like, I know exactly where that is. That's a crap deal. But he was so built up on all these other podcasts. Forget that. And crazy enough, I just interviewed, pre-recorded on another podcast this week. And the podcaster mentioned, he's like, yeah, like bring on this person. And I was like, "Okay, we're off the air. I gotta ask, why? Because I know this person's lost money on deals. Like, it's been
yeah,
like a bloodbath for them, and they're getting major, like, complaints, probably lawsuits coming after them. Why? It's because they say they'll send it out to all their marketing because they have a lot of followers." I'm like, "No, that's not the reason to do it." And I get it. Emma, I have the same temptation as well. You know how many times people have told me, "You should bring on Kiyosaki?" I was like, "Yeah, but do you know that guy is wearing a tinfoil hat right now? Like, that guy, I don't even know if he's going senile or what."
all I need to hear is the way he treats my friends when they meet him at conferences, my lady friends. Let's just put it
That's
we're gonna get sued for libel now, we gotta be careful.
See, I'll promote his book all day long, right? Like, you talk about Rich Dad Poor Dad, saying that's an absolute must read because that's good stuff.
Yeah,
Now, would I bring him on today? No. Who knows? Maybe I'll go back on it, but maybe I'll just challenge him a lot and fire some hard questions. But yeah, his ex-wife was in one of our mastermind groups, and no, I'm not going to do that. And Sharon Lecter, like I've
mhm,
talked to her as well. There's so many good people out there who can teach you good things. So just be aware that one, if you just hear them on a podcast, just so you know, people are starving for guests. Emma was
mhm.
starving. That's why she went for me. I mean,
Yeah, I know, it was like, "Oh, I've been doing it for 2 years now, who am I gonna get on the show?"
like, he has to recycle it, you know, but it's true, right? Like, it's not hard to get on the shows if you know where to look. That being said, you can always tell the success do leave clues. Look for the track record. Look for those reviews. It doesn't take long to do a little bit of a Google search, find some
Mhm.
Reddit posts, and they may or may not be true. Take those with a grain of salt as well. Heck, you Google my name, you'll even find some bigger pockets posts. The crazy thing is some of those people that complain about it, I don't even know who that person is. Are you sure they came to us? Because
Yeah.
what they're talking
Yeah.
about doesn't even match up, but okay,
It's
because not
it's
even
nice
under.
to have it real though, right? It's nice to have like you said, it's untrustworthy when there were 0 bad reviews, and I hate when somebody leaves a bad comment on a YouTube video or something, and I'm like, "Oh, you should just leave it there." It's tough, but I try to just say, "This is me. This is what you get."
Yeah, exactly. It's true. And none of us are infallible, right? Like we all have faults. You all need to have a little bit of grace. Like that's the thing is over the years, like I've perfected my system to a point where like I know nobody out there is better than what we do in that system. Between banking, nobody does that better and nobody does anything better than our one-on-one like passive income consulting. But that's it. Everything else we refer out to because we're not
Mhm.
I'm not
Yeah.
as much as I'd love to have CPAs on our own team internally, the thing is I still farm that out. Like, even though it's harder and harder to always find a good CPA, because once you do, then all the real estate investors flock to them. And then they can't handle the growth, they can't scale. And so then all of a sudden they drop balls and everybody hates them again. And then it goes swings the other way. Like
Yep.
it's a fun game to play that we're always trying to bring people in and out of our network. But that's the fun of it too. But no, that's the thing. Like I know that somebody's legit when you start to really get to know them enough, when you start
Mhm.
to go behind the scenes, not what fancy jet they fly or house that they live in and all that kind of crap.
The minivan that they drive.
Yeah, like I I brag about my Nissan all the time. It's like
Yeah.
I got my Nissan Maxima and a Pathfinder, right? Because my sister-in-law used to work for a dealership. So
Yeah.
I brag about those things and I love them. And it's crazy because I will go hang out with friends that have way nicer cars than me, but I know I make more money and I just don't care. And I
Mm,
think it comes back to what I said earlier is that it's usually people that try to talk a big game. It's usually because they lack the game.
yeah. I think also authenticity comes in many forms, and I love how you say that, like, your BS meter's going off. One of my favorite business people is very motivated by money, wants a nice car, but you can tell that this is just her. Like,
Yes.
she's unapologetic, that she
Mhm.
loves having these nice things, and for whatever reason, normally that would get my BS meter going, but with her, it's so genuine, even though it's not the way I personally wanna live. I want to live by her code of authenticity because she does get a lot of criticism for that. I heard
Yeah.
another one where there's some marketing help for somebody, and he is a suit and tie and shiny pointy shoes kind of guy. And if he tried to put on a t-shirt or shorts, it would feel unnatural. It feel like he was trying to play a role. Oh yeah, I'm chill. I'm Steve Jobs. So that authenticity can come in many forms, but you
Yeah.
have to feel that it is very genuine no matter what package it's in.
That's why I like to look for those that are like good go-givers, right? Because
Mm,
the best business owners, the best investors I've ever met are people that are giving. They don't have the big egos. They don't try to say, I'm too good for you. It doesn't mean that they have all the time in the world, but they'll try to treat you, at least in that moment, like they do.
mhm.
And those are the people I love. And it doesn't mean that those other people that don't do that aren't legit. They might legitimately be successful in their own right. Like Grant Cardone, legitimately successful in his own right. And I've even heard people have, I've been to his house. I've hung out with him and his family. This guy's a very hardcore family man. I was like, say whatever you want about him, but this is who he is. But at the same time, it doesn't mean like I want to be like him.
Yeah, it doesn't mean his deals perform.
Yeah, it doesn't
And
mean I even like his personality that much.
yeah, it's tough because I think that marketing image can
Mhm.
really affect people, and you're trying to draw people in who have your similar values, your
Yeah.
similar way of dressing, your similar way of living, your life philosophies. And so sometimes we just have to narrow down who we are talking to because I'm not talking to all of these people. And that's where the authenticity really comes in because you're only talking to this kind of person who really you can relate to and who can relate to you. And that lack of breadth sometimes to
Yeah.
me signals authenticity because they're not just trying to be all things to all people and living like a similar caricature of what a successful person would look like.
Yeah, it's like, I'll mention somebody, in a good way, right? If you've ever seen the real King Kong, he's Kong and Luan, like that couple, they're kind of like a power couple in real estate space. They are legitimately who they are. Like when you
Mhm.
see their videos and stuff, I've hung out with Kong personally and gone to dinner with him many times. Like he legitimately is like super hyper Vietnamese guy, always talking about the Monet and all that kind of stuff, right? It's just his personality. He's like freaking ADHD going hyper speed, right? And his wife's much more chill, but she loves the Gucci, right? And they'll
Mhm.
spend their money on that stuff, and they have every right to do. And you might think, oh, that's flashy. They're probably fake. No, they're legitimately that way. And but again, they're like the coolest people ever. And the thing that shocked me because I was looking up to him, and then when I started telling him about my financial situation, he's like, dang, like I want that. That's so awesome. I make good money doing like Instagram, TikTok, and all the videos and stuff. He's like, man, like I want that much of passive income coming in for
Passive.
me. Mine's active. Yours is passive.
Yeah, okay,
Right?
so let's dive into that a little bit deeper because I know that's why everybody listens to the show. For the nuts and bolts center section, we do past, present, future here. Tell me
Yeah.
about your past, build your credibility. Why do you have the experience to say what you're going to say during the present part? What are you an expert at? So let's talk about that passive income. Like you went after, you lost it, then you had to rebuild it again. How was it the same? How was it different? What are you seeing working right now that's both always worked or that's working that maybe new things that people should look into? Tell me all about different kinds of passive income because we talked at the beginning when it's not a business. What is
Yeah.
it?
Passive income is legitimately like where your money works for you instead of you working for it, right? It usually means you have to put your money with people that are doing the work.
Mhm.
That's really what's required. And I'll tell you this, like passive income does not mean passive investing in the sense that it's brain off investing. The worst thing you can do is completely ignore your money and think, I can just set it and forget it. That's what financial advisors teach you to do, right?
Mhm.
Why do they do that? Because they're scared. They know that if you do actually watch your money, you're going to start questioning them and do what actually is the statistics. Every 3 to 5 years, somebody fires a financial advisor in their life. So that means
Mhm.
they're changing financial advisor every 3 to 5 years because once they start to look at their money and say, wait a minute, that wasn't what I thought it would be next. And they
Yep.
just keep going the same broken system over and over, hoping that next personality will do it when they're just trained by the same people as the other people were. And so, no, passive investing means you're still a wise steward of your money. You're watching your money. Whatever you watch and pay attention to will expand and grow. Whatever you ignore will leave you. If you ignore your teeth, they'll leave you, right? You ignore your family, they'll leave you. You ignore your money, it'll leave you too. So make sure that you're paying attention, but it doesn't mean you have to be doing all the work. So if you would have asked me, say 3 years ago, Emma, I would have said, I think one of the best things ever would be turnkey properties, which is semi passive. I wouldn't put it fully passive because even if you have a property manager, you can still have to manage the property, right?
You were talking about where you were in California for 3 months or whatever,
Mhm.
people are off doing their thing, and so we went backpacking for 3 months across Arizona, and I remember being at the top of a mountain, trying
Uh-huh.
to get a signal on my phone, thinking, "I sure hope none of my properties are flooded. Maybe my property manager's trying to get a hold of me." I was always checking on them because I would ignore them for 3, 5 days, maybe up to a week while we were in the backcountry and couldn't get on, but it
Uh-huh.
was never passive enough that I felt like I didn't have to be checking in to handle some sort of a crisis. And on
Right.
my truly passive investments where I wasn't on title, I'm just a limited partner, be like, "Yeah, I'll catch the next report when it comes out." I'm being a steward, but I don't feel like anybody's waiting on me for any decision making or any experienced control.
Exactly. Yeah, that's the thing. If you get a great property manager, you feel totally passive. You get a bad one, and then it's all you might as well be managing your own property, right? And
Yeah.
in fact, it might even be worse than managing your own property in some
Mhm.
ways. Yeah, you'd have to be careful. And again, I still think like yeah, having turnkey rentals is a great example. Having rentals, even if it's not turnkey, even if you're managing it yourself, should be a part of your portfolio because that growth, that amplifier, that you get that exponential effect, especially when you leverage debt, is
Yeah.
incredible. Dave Ramsey can suck it. I mean, like his method of pay off your house first, maximize your 401ks, and then finally you can start paying in
Getting cash
cash
for
your
real estate
base.
investments.
If you're like trying to save
Yeah.
your money as it goes up and up, it's the
Yep.
dumbest thing ever. When you can lock the price in, freeze it, have the mortgage, and then pay it down if you wanted to really aggressively pay it down, you could and do it better than his method.
Yeah.
Again, Dave Ramsey was making millions of dollars in his active business to be able to do that. By the way, Dave Ramsey's worth about 200 million, not a billion like some people claim. 52 million is his business value. 150 million is his real estate. So people are like, Dave Ramsey says this. Don't do what Dave Ramsey says. Do what he does.
Yeah.
You'll find out business and real estate are the two best investments, not his mutual funds. He has little to nothing in those places.
Yeah. I heard Scott Galloway talking about this recently on a podcast where he was saying that for your average person, public markets are really the way to go. And the interviewer, his credit, said, "Well, that's not what you did." And he said, "What I did is not for most people. And I'll tell you why." And he went, "I can go into any private market that I want because I know hundreds of CEOs across the country. I can go and say, 'Hey, can I invest early stage?' And they would all say, 'Sure, Scott, come on in.'" He said,
Yeah.
"It's a ton of networking. I had to start my own business. I lost it." He was just going on how difficult it is to get into this world of who you know. And he said, "That's just not what most typical people are going to do." He goes, "I have a wealthy." I don't remember what he said, his net worth. He said, "But would I do it all again if I could go back and relive?" He said, "I don't know. Was it worth it?" So that's where people get this confusion because it's so easy set it and forget it to public markets. And there seems like there's so much extra work to private markets. I feel like my message is kind of, hey, you guys, let's meet somewhere in the middle. You don't have to
Yeah.
be a business owner. You don't
Mhm.
have to know all the rich guys. There are ways to get into private markets that are easy and safe and all of these things, but it's definitely not turn your brain off, set it and forget it.
No, definitely not. Let me give you an example. Like I had one guy that he did set it and forget it inside of his retirement plan. He was one of the top ranking generals in the state of California, National
Mhm.
Guard. And he was lucky enough. He actually, by the way, he pulled out his money out of the market right before Y2K and then put it back in when it got lower and then pull it out again right before the crash of the Great Recession too in
Right.
2008. And he'll admit, I just felt like I should pull it out. I didn't know I was actually going to be right. I just did it. And despite doing that, doing better than the average person, he still only had $1 million saved up. And I say only, but in truth, if you look at Fidelity, they have 45 million clients. Only 810,000 have at least $1 million in there.
Wow. That's
So
low.
it's
Like,
less than 2% even have $1 million in their Fidelity IRAs or 401ks. But the crazy thing is, of those people, Transamerica did a separate study. 35% of those people that were surveyed think it will quote unquote take a miracle to be able to retire. Why? Because he found this out when he was 60, retiring from the military. He goes to his financial advisor. He says, "Hey, you've got $1 million. Great job. You can now live on 30,000 a year, 3%." Right? He's like, "That's not the retirement I expected as a
yep.
millionaire to be a broke below the poverty line millionaire."
Yep.
And he even has pensions. Not all of us have like pensions to help save us either, right? So he found me through another podcast and whatnot. We started working with a one-on-one. And so we started looking at opportunities. He decided, okay, let's look at these. He did get a couple duplexes that were being managed, but then
Mhm.
he also got into oil and gas. and got into mineral rights and things like that and get paid off that. And so there's some tax advantages there. Even
Mhm.
did some multifamily syndication as well. By the time all was said and done, instead of 30,000 a year, he's living on over 100,000 a year just from the cash flow.
Yep. And
And that's what we're finding more and more, especially lately, last couple of years, when I started seeing what's happening, I see the multifamily space was overly hot. I was like,
mhm.
guys, you might want to be careful there. Now might be a better time because of what's going on with interest rates to maybe lend your money. And
Yeah.
so moving to lending, which is way simpler, way more hands off, just like it is doing like a syndication, right?
Better
Yeah,
and just less risky.
less risk.
I do kinda what you're saying, like, he has some of this in his portfolio, he has some of that in his portfolio. I
Right.
think sometimes people, as passive investors, become maxis on a particular type of thing, and that's not wise or safe. I'm only a maxi on something that I'm good at running, like, as a business, and then everything else, I'm like, "I'm dumb." Like, Imma spread it around and try to understand it well enough. I'm not gonna invest in something I don't understand. I'm not gonna just give anybody money that asks for it just for the sake of diversification. But I'm definitely gonna be way more hands off with the passive stuff, and I'm not gonna overdo it on any one thing passively. I'm only gonna overdo my actual business.
That's right. Exactly. Put the focus on the business, let your money work for you in different ways. And yeah, you can spread it out. That's why we don't even work with clients unless they have at least 150,000 to work with because
Really.
we want them to not just go throw your money into that one deal and hope and pray that one works out, right? Because no matter what anybody tells you, there's always risk. No matter how, even you're buying your own property, there's risk. Even though the chance of loss is low, it could still happen. Even
Mhm.
if you're lending your money and you can literally have a first position, like you could be the first mortgage on that property, still, if that person defaults, you have to take over that property. One, it's a pain in the butt to do it. But then two, what if the property value isn't as much as you thought? That's why that due diligence up front is so important. We teach that, right? Because you got to do it. And so that's the thing, like, you can be very hands off and still be very compared to almost anything out there, really be more hands off and passive in its sorts. But it doesn't mean, again, that you just ignore your money, right? It doesn't mean that you just never manage it. You still have to look at it. And I'll tell you my favorite ones I'm in right now. Like, I still have a few rents properties, but I sold most of them off the last few years just to take the gains.
Me too.
I do have a little bit of money still in syndications. Mostly syndications are trying to recover
Yeah,
if there's
me
anything, just trying
too.
to make sure we get our principal back. But for the most part, like lending is one. There's a 12% lending fund that we're putting money into, get paid quarterly, which is great.
Yep.
I have some money in oil and gas. A lot of it I've been putting into the last 3 years into raw land
Mhm.
partnership, where again, they're doing all the buying and selling of raw land and then selling it on terms. So
Mhm.
essentially, we have this mortgage note with people buying
Right.
land from us at retail value that we'll make up like 20, 25+% a year on. So
Yeah.
I put in a little over 500,000 to that and it's generating over 13,000 a month. So
Nice.
lots of different ways you can invest. And that's the fun thing. When you realize that, there almost doesn't seem to be much of a point for gambling so much, like you said, in a market that you can't control, like stocks, like mutual funds, where, yeah, sure, you might keep a little money there that's liquid. It can be there. When it loses and you can't do a thing about it. And you don't want to be like my dad, who literally, and this is not just him, but I had many clients over the last almost 25 years that when they put money in the year 2000, like 100 grand, or let's say, for example, they had to wait till 2015 by the time fees came out and the market recovered before they finally broke even. 15 years they had to just stay in it for the long haul, quote unquote, just to wait for it to come back. And then finally by 2020, given inflation, they're like, oh, now I finally made my money back because I lost half my money to inflation. It took 5 more years to finally have the same amount I have after inflation dollars. That's ridiculous. Wait 20 years to finally break even after inflation. Where real estate, that was definitely not the case. As long as you were wise with your real estate, you can make so much more money with more safety. So why not go that route?
Yeah, especially if you can figure out a way to do it pretty passively, which I started out much more active. My husband was still working. I didn't have any need for passive income. I was just trying to run a real estate business and grow it so that we could then transition to passive income. And that's the process we've been in for the last several years. But let's talk about when I very first started. I loaned some money to somebody who was maybe a little untrustworthy. I got kind of suckered in by a really high interest rate, and somebody I knew had vouched for him, and somebody else I knew had invested with him, and we became co-misery partners as we were trying to figure out like when is he going to pay us back or whatever. And at a certain point, I did eventually get paid back. Spoiler alert:
Mhm.
got some attorneys involved and just really made a nuisance of myself. But before that happened, and I just didn't know if it was going to come back, I called you and I said, Chris, I don't know what to do. I think it was like 60 grand, and at the
Mhm.
time, we had, like, a couple hundred, but it was still a big chunk, like, maybe
Yeah.
almost maybe a quarter, not quite that much, big chunk of our net worth, and I was really torn up about it, and I had forayed into private markets, I was feeling proud of myself, but I didn't know what I was doing still and felt like I was gonna get burned. And you gave me some really good advice about the psychological impacts. You weren't giving me any advice like the attorney, lawyer up, make a nuisance of yourself. It wasn't like, here's what
Mhm.
you do. It was like how to get straight with the fact that I made a decision that might be a bad decision. Can you
Mm.
talk more about you? I don't know if you remember that specific instance, but I'm sure you've had this happen to your clients before. Like, how do you work through the fear of loss and then recovering if you actually have had a loss?
Yeah, that's a good point, and it's because I lost so much. That's the thing is once you lose money, that fear does go away a little bit, although it's not like I seek after trying to lose more money.
Mm.
For me, 2008 through 2010, really 2007 is when it started, when the banks started tightening credit limits, and that made it tougher for me to get access to equity, and that's when our business started failing. That's really what happened with us is that everything was just like the perfect storm in a George Clooney, "I'm gonna die" way. Spoiler alert, that's the movie. There you go. But he dies.
Yeah,
Um,
well,
it's based on a true story. Look it up, okay? But no, like me losing everything, it kinda helped me realize what I actually had, right? Because
mhm,
I had to detach my ego from my stuff. Because before, the first time I became financially free, my ego was inflated because
mm,
money really made up for my lack of self-worth.
mm,
Imagine taking all that away, you're left with nothing. You either face the choice of either I'm worthless or my worth didn't change just because I lost money, right?
mm.
That's one thing, and so losing that fear a little bit helps, because whatever you tend to fear, you tend to attract. If you
Yeah,
fear that you're gonna lose money, I'll tell you, I've had many clients this I mean, we've coached hundreds now, really, personally, I've coached thousands of clients, but over the years, I've noticed that if you fear something, it will happen, almost like magic. If you fear like, I have one client in particular that's he's like, "I hope this goes okay," because he's like, "I hope this doesn't go wrong," which means he does have the fear that's probably gonna go
mhm.
wrong, and then, like magic, even if it's a turnkey rental, it's like, how did that happen? How did you find this one rental in a appreciating market that just happened to be a
The
piece of
dog. Yep,
yeah, like, how'd you do that? And same thing with investing and all that kind of stuff. So I have to teach people to have a more of an abundant mindset first.
okay,
Important. Have a faith-filled mindset. Now, also understand being realist, that doesn't mean you're naive, that, yeah, losses will probably happen at some point, right? Of course, if you do, make sure you protect yourself and you have, like, your emergency fund in place, you got that foundation in place, you've got monies in other places, that shouldn't cripple you too much.
okay.
But I'll tell you from an emotional standpoint, though, I saw one guy was like a multi-deca millionaire, had, like, literally worth tens of millions of dollars. He had one deal that was a 200,000 investment that distracted him so much that when we asked him, we're like, "What's the real cost of that lost investment?" Man, based on how much time and effort and distraction and stress I'm having right now because I keep hyper focusing on it, I'm sure it's already cost me millions. It's not the 200,000 you lost. People might think the worst case scenario is losing 200,000. That's not it. It's what happens after that that creates more of a loss.
Yes.
And that's kinda what I was talking to you about. It's not just the loss, sometimes it's the distraction from it. And if you can detach from it and say, "You know what? It is what it is." Yeah, you can go talk to attorneys and stuff, and at what point do you put pressure? There's a little balance there too, because if you put too much pressure too early on, you just go, "I'm bankrupt," and then they're out, and they're like, "Crap, now I got nothing."
Mhm.
But at the same time, you wanna be able to put just enough pressure that they don't wanna go bankrupt, but still have that pressure say, "Hey, remember me? I expect to be paid.
Yep.
I don't know when it'll be, but I do expect to get my money back." I actually have an investment right now that not a ton, that I invested in a fund that was great. They even advertised on my podcast. And then a couple years ago, all of a sudden they sent out this letter, this kind of press release to everybody saying, "Hey, we got ripped off. We put a lot of our money with this particular custodian. This custodian took $50 million from us." And of course, my money's in there too. And I had some clients were like, "What do I do? Because I've got money in there." I was like, "I do too." Here's how I look at it. Mike, it's obviously not a Ponzi scheme. That's the good news. I try to avoid going into any kind of things that look like even could be a Ponzi scheme.
Yeah.
I've been very fortunate not to do that, but it wasn't a Ponzi scheme. It was just the fact that this other company literally just took the money and was trying to rip them off, and now they're on legal disputes. And then, by the way, I've thrown in more money to help them fight legally against this other company because I'm like, you know what? I think this would be worth it. And they're doing it as a debt fund. So I'm like, even better. I get paid interest. I'll take it. But that being said, like what I tell all my clients is just look like you've been putting money into an IRA or 401k for how many years? Several. Okay. How long is the money supposed to be locked up in an IRA or 401k? 20? Okay. What if this got paid back in 5 years? What if it took that long to get that money back? That's still sooner than 20 years, right? That you locked up in your stupid prison of a 401k. Yeah. There you go. Just view it like an IRA or a 401k. And honestly, I actually learned this from one of my friends that I borrowed money from and then
Mm.
I pay him back immediately. I'm just going to view this money like my retirement account. And I've used that since for myself to put in the right relationship to say, you know what? If it's meant to be, it's meant to be. But like my dad also taught me when I was young, it's just money. You can always make it back. It sucks, but you can always make it back. So don't get overly hung up on it. Because if you do, you will not just lose more money than what you invested, but you'll lose all your happiness and joy at the same time.
Yes. And the opportunity cost, can you imagine if I hadn't got that money back or it's the self-doubt that created if I just said, you know what, I'm not cut out for this. I'm just going to go back to taking photos or teaching piano lessons, which I still love doing, right? I'm not trying to knock those businesses or those jobs, but it really would have cost me way more money in not playing the game than it would have if I'd stayed in it. And I think this is a lesson I learned. I remember when I was in high school, I went rock climbing for the first time with my sister and her boyfriend, and I'm climbing up the rock and I'm doing my thing. I'm feeling like, yeah, I'm gonna be rock climbing. This is a bad A sport, right? And her boyfriend said, is it time? Should it be teacher? And I'm like, what? What are you talking about? He says, you need to learn how to fall. Right. And he
Oh,
reaches up there and he starts wiggling my rope and he's trying to grab my foot. And I'm scrambling up there as much as I can. Right. I was probably like
uh-huh.
5 feet off the ground when I was feeling like the king of the world. Right. But so I scramble up. He's trying to grab my foot. They're grabbing the rope. At this point, they're laughing. Right. And they're like, if you
Nice.
don't learn how to trust your equipment, you're never going to be a good climber. And sure enough, of course, I fell
Right.
off the rock and I'm dangling there on the rope. They said, do you trust the rope now? I'm like, thank you for that life lesson you've just taught me, but it's totally true. You have to learn how to fall, and you have to learn that sometimes the activity that you are engaging in might involve a little bit of falling off the rock face every once in a while. I think that experience, the things that you told me, I was able to just say, you know what? Everybody who does this loses money eventually. The goal is to make more than I lose. And when I got that into my mind, I was able to press forward and keep going. And over the years, that's made me way more money than I've lost. And so I appreciate sharing that advice with me and with our listener too, because this is serious stuff. We're not playing here. This is real money. This is a lot of money we're talking about. The opportunity is huge, but don't let the opportunity cost keep you out of the game.
Yeah. Don't go chasing returns. That's why I don't try to go after that kind of stuff. But
Mhm.
at the same time, don't just not invest. That's the best way to overcome fear. Just try something. Even if it's just, I'm going to try my first 50,000 into a deal. Great. Do that. Just try it and get exposed to it and see what happens. But that's the problem. I had one client that literally took 3 years before he made his first investment because he was just so scared.
Nervous.
And the thing
Mhm.
is, he actually lost a huge amount of opportunity. Now, granted, better he did it then than never, but
Mhm.
if he had done it 3 years prior, he would have been farther ahead today. I even have one client that he's now seeing what I said, almost like the whole shake your rope thing.
Mhm.
I was trying to get him out of he only had one investment property that was his first home that he then turned into a rental and then his own house. And my Asian clients are like the best savers ever. They'll save like half income. He was no exception. And he's saving all this money to try to pay down his mortgages to be debt free. And I was like, what do you actually free up when you just look at principal and interest? Tax and insurance are still there, right? So principal and interest, what do we free up? It's all free up 4,200 a month in 6 years. I was like, yeah, but this one rental property has 700,000 of equity, but your cash flow is only 200 bucks a month. You're getting a 0.3% return on your equity. What if we sold that property, took the 700 grand, 1031 exchange it into other properties out east because California sucks. Let's go out east on the southeast or something like that. It took this guy, this is a different guy, another Asian, 2 years before he finally did it. And when he did it, he went and bought like 6 rentals in Louisiana. I wouldn't have personally bought there, but he did. And then he just kept reinvesting that cash. And now, as of today, which is a year before his 6 year mark, he's now making over 100,000 a year of cash flow just because he was able to take that leap. And that's the thing is like, it's hard sometimes to break those little workhorse blinders that you put on
Mhm.
sometimes. You think this is just the way. This is not the Mandalorian. This is not the way. Like there's more than one way. And there's ways to make this work that you can actually be more efficient. And sometimes just it takes somebody to open up your eyes to see that there's
Mhm.
another option.
Yeah, no sacred cows, right? Kill the
Yeah,
sacred cows. You have to
that's
figure
right.
out what they are and just no respect for the sacred cows. And maybe that's where we found our ability to just think outside the box a little bit because there are a lot of sacred cows in our I've got to have a nicer car. I've got to dress better. I've got to have a bigger portfolio. I've got to save more. Whatever our culture tells us it is that we're supposed to be doing is like taking a good hard look at that. And is this serving me or is this not serving me? Great lessons there. Thanks so much for hanging out with us, Chris. How can people get a hold of you?
Best way is look up anything Money Ripples, whether it's at Money Ripples on social media, moneyripples.com, or even our Money Ripples podcast you can check out as well.
And then anything that you would like to tell our investors that we did not have a chance to cover, just parting words of anything that you feel like you really want people to know.
I just say that there's always hope. Don't get impatient with yourself. Don't get too frustrated or anything like that. The fact that you're actually trying to learn something that most people haven't even looked into themselves, an option they don't even know is that should be commended by itself. That makes you, I believe, in the top percentile of people that actually will have success. But again, just remember you're never alone. That you don't have to be in this alone. You don't have to just figure this out. There are ways to do it. That's why we're here. That's why we're doing the podcast so that you aren't alone, that you can make better decisions, especially where tens of millions of us have already made these great decisions to be able to create wealth. Why not you?
Yeah, exactly. It's hanging out with the people who are doing what you want to be doing. That's one of the reasons I first reached out to you because you were talking about the things that were important to me. Passive cash flow was a really big deal. I knew that it wasn't just going to happen overnight. And I just started spending time where you were spending time and have met so many various great people over the association and just seeing where the network goes and the twists and turns and the third degrees of separation. And it's just amazing what's happened in my life when you look at like over the last 7 years of just people I've met taking that leap and surrounding myself with people who are doing it. So if you want to get a hold of Chris at Money Ripples, great podcast. If you want to get a hold of me, investwithemma.com and let me know. Like we got a 12% debt fund. We'd be happy to help put your money to work. And if we are not a good fit or we don't solve the problems that you have, we can introduce you to some people who do because we've had well over 100 guests on the show by now. And I'm sure I can hook you up with somebody who can solve the problem that you are in particular dealing with. So can't wait to hear from you after the show. Thanks again, Chris, so much.
Thank you so much.
All right. We'll see you next week on our next passive income adventure.